Yo, yo, yo. Welcome to the channel. Thank you so much for tuning in. And without any further ado, let's get right into it. So, today is September 21st, 2021. It is Tuesday, right? Yeah, it's Tuesday. And yeah, so let's just get right into the chart on AMC and say what I'm thinking here. So, I do want to point out here that I will be referring to another video of mine and pretty much what I've been talking about with this stock for the past week. Um, but I do have a video called "Mother of All Bear Traps" uh, regarding AMC, and I encourage you to, after this video or something, you can go check it out and see what you think about it. But I'm going to be referring to it because it plays a role in what I'm talking about here today. In that video, I did talk about the potential for us to have a dip down into this $38 level. Since then, I've been revisiting the idea and using fib retracement to figure out what I think about that. And the way fib retracement works is basically you just select the tool, and trading view is what I use. You go up from the bottom of the move up to the top. Let me turn my retracements back on. Sorry, I was simplifying them for Twitter. If you don't follow me on Twitter, my Twitter is at David Marino Jr. You can find it in the description. Yeah, so basically, this is your Fibonacci retracement. Right now, I have this trend line sitting here. I'll explain that in a little bit, and then also I can add here a 0.65. Oh, actually, I already have it right here because this in the Fibonacci sequence is actually referred to as the golden pocket. As you can see here today, we had a wick directly into that golden pocket, and then now we bounced off of what I believe is going to be a new trend line that we may or may not be respecting. Um, but yeah, so I mean, I pretty much called for this sort of price action. I think on September 16th was the day that I put that video out, and now here we are at September 21st, and here we are. This is what we expected. This moved down, and what I want to talk about is I want to update my thoughts on what that reversal might look like, why I still think it's possible, and other things of that nature. So let's just get into it. What you have forming here still, and you can chart it a few different ways, but I believe what you have is an ascending wedge. I mean, a falling wedge. I'm sorry, of sorts. And basically, what a falling wedge is it's a bullish reversal pattern. So typically, this is going to be a pattern that you're going to see at the bottom of a downtrend, and it signals a reverse to the upside typically. And the reason that it works from a psychological perspective, I've been using pink lately for my charts. I don't know why, but usually, and I can chart it a few different ways, but I'll just show you this one for example. The way that the reason it works psychologically is because what you have is lower lows and lower highs, but the lower lows get increasingly less impressive than the lower highs do, and you just use trend lines to determine where the falling wedge is. But as you can see here, the downward price action from the top is much more aggressive than it is from the bottom. And so what it signals to the market is, hey, this stock is going down, but and psychologically this is happening. People aren't actually thinking this, but it's what's happening under the wraps is the price is going down, but it's not going down as fast as you might expect if we were in this aggressive downtrend. Every time that it tends to go down, it seems like it wants to bounce back up. Um, and that's just an overall trend that may be playing out here, especially because AMC has been in this more bearish trend, and we actually did have a falling wedge that we've broken out of before um, recently that kind of started this run here. So and you can chart it a few different ways. So I mean, you can do it like this. You might have these basic dips, but that's your double bottom, and then boom, you have your breakout, and you go into an uptrend. So and I don't want to get into it too much more, but I do want to talk about some of the other indicators that I'm looking at that are indicative of a reversal. So Another thing that we have is Elliott wave theory that plays in our favor. And basically, Elliott wave theory says that you have a 5 wave impulse, which determines the direction that the stock is generally going to go, and then a 3 wave retracement typically. And there is also a 5 wave corrective wave that could lead to upside as well. So we'll talk about both of those. And I know that if you guys are tuning back in, it can be repetitive, the videos, just because right now I just feel like we're kind of in the same spot that we've been in, even though we have all this emotion going on in the stock, and a lot of people are kind of freaking out on Twitter, like, "Hey, what's going on? What do you think about the price action today?" and stuff like that. So, which is kind of typical of a falling wedge as well. You're gonna have bulls they're very antsy about the price action, right? Because it doesn't feel good to be having this having your stock going down in this sort of manner. But what I think with Elliott wave, let me get the wave count here. What I think happens here is you have a 1, a 2, a 3, which is typically your most powerful wave, a 4, and then a 5. That's how I'm counting it. And the reason that, and I had this question. The reason that this 5 wave appears longer is than the 3 wave is because it's a little bit more diagonal. So price got a little flat here, and I do want to talk about that too, because the reason that it got flat is because we were actually in a rising wedge as well, which is the opposite of a falling wedge, and actually signals a reversal to the downside. So I'm going to change the color of this to make it simple, and I'll take the falling wedge out. And these two types of theories, these patterns combined with Elliott wave, can give you a better idea of where the stock may be emotionally, right? Because not only do you have this 5 wave uptrend, um, that seems to be consolidating, and also this is something that is in Elliott wave theory. I can give you more details on. It's consolidating at the top. It's insinuating that price action is getting less and less enthusiastic to the upside, which would signal a downward reversal, as we saw. But also, you have this 5 wave count, which leads to your corrective wave. And I was calling for downside on this day. And a lot of people were very excited on this day because this was the local high of $52.68. But I was like, man, look, I think we're going to see downside. I didn't expect this much downside, if I'm being honest. But now it really makes sense, because if you do an A, B, C corrective, and you combine that with the Fibonacci retracement tool, boom, you land right where you would, as I described before, right? You land right here in your golden pocket, the 0.618 and the 0.65, in between that region. So, what does this all mean? I'm saying a lot. What I think is happening here is we're having a falling wedge, and we're having the end of a wave 2. And what I would be expecting here soon is a reversal and then more upside, which would be wave 3, which again is normally the most impulsive, explosive wave of a larger 5 wave set. This is what Elliott wave would insinuate, and you can actually measure what this move would look like to the upside. And obviously, none of this is guaranteed. None of this is financial advice. You should not be taking financial advice from people on social media. I'm not a financial advisor. I don't know what I'm talking about. I'm just a guy on YouTube that is playing with charts. But with an extension, an Elliott wave, you could see, and also, there's a lot of emotion in this stock. The stock's all over the news. It's all over social media. It gets millions of impressions a day on social media. But you could see a wave 3 up to, I mean, maybe you would see it up to this 1.618, right? And then your 5 is going to look pretty similar to your 1 as far as like distance. You'll see this wave 3, and then you'll see a wave 4 down, and then a wave 5. But the wave 3 can get very explosive, and I'll show you an example of that. In June, the run from May to June, we saw a wave 1, 2, 3, big vertical 3 here, retracement down, a 4, and then a 5. So you can get very impulsive and right? And the emotion that's happening here is bulls got beat down from January all the way down to May. Okay. And then what happens is you get this reversal, this pattern reversal, and you go, oh, wow, there's hope in the stock. There's hope. And then you see this explosive downside in wave two, and it demoralizes everybody. Let's measure this move. So this was a 20% down, a little bit less than 20%, but you get the idea. And this is demoralizing. This is bulls are feeling beaten down, bears are feeling very victorious at this point. And then you get this when price breaks above this wave one, you get this impulsive move because bulls go, holy crap, it's real. We actually might go back to all time highs. And then people pile into the stock. And then you have this, finally bulls get exhausted and bears come in and try and fight back. And then bulls say, no, we are in a confirmed bull trend and we're going to go up forever. That's the emotion that plays out here. And then eventually bears went over, and then you have a more bearish trend for a while. You Because of the emotion built into this stock, I'm telling you, you could see something like this, and this is what I've been calling for. So let's get a little bit more granular, and then we'll close out the video from a technical standpoint. Again, I don't look at any fundamentals on the play. I don't look at like the market economic stuff, like the market makers and stuff. I actually do discuss some of that in my mother of all bear trap scenario, so you can check that out if you want to know more about my thoughts on that. But I mean, 95% plus, I'm paying attention to technicals because I think emotions are the most important in this play. So, what I'm expecting, my conviction is that this is, in fact, the falling wedge that I describe. And it could look anything like this. Okay. I actually think it's a little bit more aggressive here. This is more like the falling wedge that I'm expecting to play out. And I'll explain why. Because I believe. Oh, wrong tool. I'm sorry. I believe that we are going into a very pressured environment. Okay. This is going to be one of these things where things are going to seem very rocky. Oh, man. Things are going to seem very rocky for one side or the other. And I think most likely there's going to be a winner and a loser. And most likely, what I think, and I just have the golden pocket here so that I can illustrate a little bit better and simplify the chart. But I think what you could see in the next, what is this, September 23rd, in the next few trading days, you could see, this is my conviction as a bull. And obviously, this can break to the downside too. I can make a bearish scenario for this too. Okay. But this is just what I believe. I think what you'll see here is you will see, now we tested up here back to the wedge. I think that you break down, you test the pocket again, you might come back up. This is high emotion stuff. You test here, the top of the wedge, you fail again, and then you break the pocket. Bears get crazy. Bulls are begging for mercy, and all of a sudden, a catalyst comes in. And then that's how this story ends, in my opinion. And we continue the uptrend. That's what I believe will happen. And I'd be lying if I told you that I'm not nervous about it. I'm relatively unemotional when it comes to trading, especially charting. I really don't let my emotions get the best of me, but I've been so involved in this and talking to so many people in the community that I am beginning to get a little bit of emotional investment in this. And I feel uneasy about making this sort of prediction just because I don't like to predict. And I would say that this isn't necessarily a prediction, but it's an analysis. This is a trend. This is a pattern that is playing out. this is a good spot for us to be retracing from our downward trend back into an uptrend. And also, I do want to talk about this briefly. In Elliott wave theory, the motive wave diagonal is actually a part of Elliott wave theory. And it says all diagonals consist of 5 waves. Diagonals can be leading or ending diagonals depending on whether they form at the start or the end of a trend. Um, Diagonals, therefore, can only form positions of wave 1 or wave 5 of an impulse, or the positions of wave A or wave C of a zigzag. Within an ending diagonal, all 5 waves must be zigzag, simple, double. Let's see. Wave 2 must not retrace more than 100% of wave 1. All right. So just to illustrate here, this is what I really want to focus on. Look at this. Look at the shape of this. Look at how this move is built. Right? See that flattening? This is a rising wedge, which isn't included in Elliott wave theory, but I combine the theories because they kind of work with each other, if that makes sense, because this signals that you're going to move to the downside. It should be wave 1 or wave 3. I mean, wave 5, wave 1 or wave 5. And in my opinion, again, nothing is guaranteed, but you're seeing, this is what you're seeing. You're seeing this diagonal. I'll bring them side by side so you can take a look. Seeing this diagonal formation, right? Oh shit, did I close it out? Damn it. Oh no. Is that how you spell diagonal? Holy snap. That's terrible. I'm sure that this will help us. Oh no, I lost it, guys. Well, rewind the video and go back and look at it. Jeez, don't be so lazy. All right, all right. Yeah, so that's what I believe is you're gonna see. Again, this isn't financial advice. It's not a guarantee, but I think that if you combine this with everything else going on, if you pay attention to the cycles of AMC thus far, which I'm not saying is something that you should trade based off of, as you shouldn't trade based off of anything other than your own due diligence and your belief. But I believe that we're in for a pretty emotional move to the upside. That's what I believe. That's my conviction on the stock. And so yeah, this was the long-term bull trend. I'll close out here. This was the long-term bull trend before we had this downtrend. If we were to get an impulsive move up and break back into this bull trend, and this isn't exact, but you get the idea. If we were to break up and get back into this bull trend, this would be what I'm saying. This is it. The mother of all bear traps. I'm telling you that bears would have already claimed victory, and this would absolutely destroy them. And I'm excited to see what happens no matter what, to the downside or the upside, because honestly, it's been such a pleasure watching this play out technically and tracking this stock. And so for all you guys out there that are supporting the videos, thank you so much again for watching all the videos. Hanging out in the live streams and stuff like that. I know I just started on YouTube and Twitter, but you guys have been so supportive so far. And so, yeah, if you want to continue to support, the best way to support is to help me reach more people by doing algorithm things with YouTube, which is smashing the like button, commenting on the video, your thoughts, what you think about my analysis. Try to be constructive, bring an interesting take, not just say like technical analysis doesn't work on this play or something. Like, I've heard that 1,000 times. I get it. I disagree. It's okay to disagree. But yeah, so yeah, leave a comment, like the video, subscribe, and turn on notifications if you want to see more stuff like this. It also helps YouTube understand that you want to see my videos more often. And then other than that, have a good rest of your day, and we will see what happens starting tomorrow. I'm excited. All right, take it easy, guys.